Welcome for today's webinar about how to maximize your tax savings with a private pension plan in Luxembourg. Let me introduce myself very quickly. My name is Patrick Malgi. I'm co-founder of TaxX.lu. TaxX.lu has been launched in March 2018 and helps everyone here in Luxembourg to file their tax return in the most easiest way. All along the webinar, you see on the bottom left side of your screen a QR code that you can scan with your phone in order to make an appointment with one of our experts to talk about your personal tax optimization potential. So don't hesitate to do so. So today we are talking about the private pension plan. So we will see what it is. We will see how much taxes you can save per year. We can see how much you can expect at the end of the contract. We will also talk about what happens if you change jobs or if you move abroad. We will see how you can open up such a private pension plan, and we'll have a small overview about the other tax savings options. TaxX.lu is partnered with Lux. Lux is Luxembourg's oldest insurance company, and we can also help you with setting up private pension plans, but not only those, we are also your partner for all your insurance questions. So basically car insurance, home insurance, outstanding balance insurances, life insurances, and private healthcare, everything is possible. And we at TaxX.lu, we are happy to help you with all those insurances with our partner Lux. So if we are talking tax optimization in Luxembourg, we are talking basically about deducting different expenses on your tax return. And by doing so, you will get benefit from the tax savings, and those are depending on your revenues. So how much taxes you could save? Basically, as I mentioned, it depends on your level of income. Let's have an example. A single with a gross monthly salary of 5,000 euros has a tax gain of more or less 42%. What does it mean? Basically, it means that if this person would deduct 1,000 euros on its tax return, he or she would save 420 euros in taxes, so 42% of the deduction. If you are a couple and your total income is 7K gross per month, then your tax gain is at 28%. So it really depends on the level of income, how much taxes you could save. What are your options to save on taxes? Basically, in Luxembourg, we have three main categories of deductions. The first one is called special expenses. There you can find, for example, interest on the private loans, like, for example, car loans. Then you have insurance premiums that are deductible. You have contributions to a private pension plan or contributions into a home savings plan. On top of that, you can also declare here donations for charity, for example, NGOs that are recognized by the state. Then you have what is called allowances. The most important here is the cost of childcare, for example, for the crash that you are paying, or domestic help. And here, domestic help, it means basically the cleaning of your house, of your main residency. There are also what is called extraordinary expenses that are deductible, but as the name says, it's extraordinary. You can find articles on TaxX.lu about this with more information what could be claimed here. Then real estate. So if you're a homeowner, you can, for example, deduct your mortgage interests, and for the year where you bought your home, you can also deduct some notary fees and bank charges. As well, on TaxX.lu, you find more information about all this. So what is a épargne prévoyance VS? That is how it is called on the Luxembourg tax return. Basically, an épargne prévoyance VS is a private pension plan. So the goal is to build up capital to enjoy later for pension age. And the advantage already today is that you can save on taxes. So why should you think about this already right now? In Luxembourg, we have quite a good public pension system. However, there's a lot in news right now that there will be probably some changes in the public pension system to get it more sustainable. You have to know that in Luxembourg we have three pillars of the pension coverage. Basically, the first one is the public pension. In that one, everyone that is working in Luxembourg is contributing automatically. It's basically 8% from your gross salary that is invested by your employer into that public pension plan. Your employer is adding another 8%, and the Luxembourg state is adding another 8%. So that's for the public one. Then the second pillar is the corporate pension schemes. So basically, that's your employer that is opening up in your name a corporate pension plan. And you are also free to add an extra 100 euros into that plan per month. And the third pillar is a private pension plan, also called 111 bis. Basically, that's the private one, and everyone here in Luxembourg is free to open up such a plan if he decides so. What are the criteria to deduct the private pension plan? So for every deduction on the Luxembourg tax return, there are some rules that have to be respected. So here for the private pension plan, there's also this criteria about the maximum deductible limit, which is 3,200 euros per person. The ceiling here is not increased if there are children in the household. It's not like, for example, for the insurances, but they also play a role in determining how much you can deduct. So here it's 3,200 per adult person. It's also individual. The ceiling is individually. So basically, it's not possible that in a couple, there's one partner that would claim 6,400 euros on his name. It's 3,200 maximum per person. Another criteria is the duration. So private pension plans have to run for at least 10 years. And the maturity, so the end of the contract, is earliest at age 60 and latest at age 74. So a few examples. So if you are subscribing at age 55, the minimum duration of 10 years is important. So you can only access that capital at age 65. However, if you are subscribing at age 30 already, then the earliest you can access this money is at age 60. And if you would subscribe at age 64, you have to wait 10 years. After 10 years, you can access the money in that private pension plan. At maturity, you have different options. You have the option just to take all the money out at once. You have the option to ask for a monthly annuity. So basically, it will be paid out each month. Or you can also mix up the two of them. Take one part out as a lump sum, the other part per month. And there's also taxation at maturity. So basically, there will be taxes to be paid on what you are getting out of the contract. If you are deciding for a monthly life annuity, then 50% of that annuity will be tax exempted. So you will only pay taxes on half of it. Normally, that's around 20-21% that you would have to pay on the total of the annuity. If you're deciding for the lump sum, so basically the payment in one shot, it will be taxed at half of average tax rate. Half of average tax rate, we have a few examples here. So for example, a couple receiving 50K out of a private pension plan, having a taxable income without that pension plan of 100K, they would have to pay around 12% on those 15,000 euros. If they are having a taxable income of 200K, they would have to pay 15% on those 50K. And if they are having a taxable income of 1 million euros, then the 50K would be taxed with 20% more or less. So 21% technically is the highest rate that would apply to a capital paid out of a private pension plan. But even with 1 million euros per year of taxable income, you don't hit those 21% maximum. What are your options? Basically, with Lux, but also the other insurance companies are offering two options here for the private pension plan. Yes, you have one option that is called at Lux security. Basically, it's an option where your money is not invested into the stock market, but you are getting a minimum interest rate on it that is guaranteed. So basically, by subscribing that option, you know exactly how much you would receive at the end of the contract. So here, the advantage is really the security, because you know exactly what you will get. You can get more. Because if there's a profit done by Lux, it's possible to have like an additional profit participation that will apply on your savings in that account. The other option is called performance option. Basically, there your money will be invested into investment funds. There is a choice of investment funds. It's not 8, actually it's 11 different funds. We'll see it in a minute. And so the money goes into those funds, and the return on invest here depends on the performance of the fund. But normally the advantage here is the performance. So basically the return on invest is higher than with the security option. So as I mentioned, there are 11 different funds that you can choose from at Lux, and you can choose up to 4 different funds. So in terms of diversification, it would be good to choose up to 4 funds. If you're choosing 4, there will be 25% of your investment each month that will go into each fund. What are return on invest on those funds? They are quite impressive, actually. For example, here the first one, DPEM Invest B Equities, they had a return on an average return on invest per year of 8.12% over the last 10 years. So, and you have also another one, Anineprev Aktien Global. On average, this fund had a return on invest of 10.49% per year over the last 10 years. So if we are looking at this without going too much into details, so the Anineprev Aktien Global from 2014 to 24 did an average of 10.49% per year. And of course, there were ups and downs. So during COVID, there was a break-in, but after a few months only, we were at the same level than before the crisis, and after the invasion of the Russians into Ukraine. Also, the fund was not performing so well, but since end of 2023, it's going up again. So basically here, if we are talking private pension plans, we are talking long-term investments, and talking long-term investments, we can say statistically or historically that the return on invest is much more interesting than for the option, the security option. However, of course, you are free to opt for whatever option suits you best. It really depends on your mindset, and we can help you to give you more information about this. Just book a call with our team, and then we can decide together what makes the most sense in your personal situation. How much will you get when the contract is at maturity? Basically, this depends on different factors. For example, on how much you want to invest each month. So minimum to open up a contract is 50 euros, and the maximum is 266.66, because times 12 equals to 3,200 maximum deductible limit. Then, of course, it depends also on the contract duration. If the longer the contract is, the more there will be on the account at the end of the contract, and of course as well on the return on invest. So basically on the performance of the funds. An example: if you would invest 100 euros per month into such a plan for 20 years, and if the return on invest, the average return on invest per year would be around 5%, then you would receive around 40k after those 20 years. If the return on invest is 7%, then you would receive already 50k. And if the duration of the contract is 30 years, so imagine you signing up such a contract at age 30, and you are getting the money out after 30 years, then with a return on invest of 5%, you would receive more or less 80k, and with 7% around 117k, with investment of 100 euros per month. If you would invest the maximum, the 266 euros per month, so the maximum deductible limit, of course, capital at maturity would be much higher. So after 30 years, for example, with an average return on invest of 7%, you would receive more than 300k out of this contract. How much taxes can you save over the entire term of the contract? Let's come back to those tables that we have seen before. So basically, it depends on your level of income. The more you earn, the more you can save. But already a single with a gross monthly salary of 5k can save 42%, meaning that by investing 1,000 euros into such a private pension plan, this person would save around 420 euros in taxes. A few more examples. So, for example, it's single investing the maximum, the 3,200 euros, and earning 5K gross per month. But this single would save by this investment 1,335 euros in taxes per year. And a couple where both would invest 3,200 into such a plan. If together they earn 12,000 euros gross monthly salary, they would save around 2,670 euros in taxes each year. So what does it make over the entire duration of the contract? So let's assume that we would invest 266 euros during 20 years. Then you would have invested a total of 64,000 euros over 20 years. And the Luxembourg state would have offered you 26,621 euros in taxes over that entire duration. If you would invest this money for 30 years, 266 euros per month over 30 years, you would have invested 96,000 euros in total, and the Luxembourg state would have offered you, thanks to the tax savings, around 40K. How much tax do you have to pay at maturity? But basically, it depends how you are exiting the money of the contract. And I have to say, most of our customers are asking for the lump sum. So basically, they will take all the money out at the end of the contract. As we have seen, what you have to pay on taxes depend on the level of income at that moment, but also on the level of income of the pension. But if we would take the example of, I know a couple earning 200K in salaries and 50K out of a private pension plan, they would have to pay 15% on those 50K. A little recap, an example of a 20-year contract, 266 euros per month have been invested, and the single is a single, and he or she has a taxable income of 50K at age 60. So basically, in total, over 20 years, this person would have invested around 64K. Total tax savings would have been around 26,600. So the total net invest, so basically the invest minus the tax savings, has been 37,219. The person would receive around 105,000 euros, would have to pay taxes on that amount of more or less 16,000 euros. And so at the end, this person would earn around 50,855 euros. A few questions that are coming very frequently. Can I stop or modify my monthly investments? Yes, you can. You can increase them, decrease them, or even suspend them. So you could stop at some time and go on later on. That's possible. You could start a contract with 50 euros a month and increase that one to 100, 150, or decrease it. So you are quite flexible. Only flexibility that is not given is that you cannot take the money out before the age of 60 or before the 10 years minimum, depending on your age. Being an expat, should you just subscribe to a private pension plan? Yes, even if you don't know how long you would stay in Luxembourg, this makes sense because you could save on taxes right now. And if one day you would leave Luxembourg before the end of the contract, at that moment you can just stop your monthly investments into that plan. The money that you have invested up to that moment will remain invested into those funds, for example. And at age 60, wherever you're living in the world at that moment, you can get the money out. So answer yes, even an expat, without knowing how many years he or she will stay in Luxembourg, it makes sense to open up such a contract that's not lost money. Am I not too young to prepare for my retirement today? As we have seen, the longer the time that you are investing into such a plan, the more money you will have at the end of the contract. So no, it's you are never too young. You could even start at the 25 years, for example, and investing 50 euros a month. So by investing 50 euros a month for 35 years, this also would make a nice capital at the end of the contract. So no, you are never too young to start with a contract. You can start with small amounts and increase them later on. What happens if you would die before the end of the contract? Basically, you can decide. You will mention the people that will receive that money in case of your death in the contract. That can be your children, your partner, family members, friends, whatever. It's also possible to change that person later on. Let's imagine today you don't have kids, so you are putting maybe your brother and sister in the contract, and if one day there are kids, you can change this, and in case of death, the money goes to your to the person that you designed in the contract. So basically, it's also a tool to protect your loved ones. So if something would happen to you, they will receive the money that is on your contract at the moment of your death. How can you subscribe? Basically, at first you have to ask yourself a few questions. The first would be, by how much do you want to invest per month? So minimum is 50 euros, maximum is 266. You have to think about the option you want to choose. So the performance, the stock market, or the security, the guaranteed capital. At what date you want to start the contract. It's always possible to retroactively open such contracts. Even at the end of the year, we can open them up on the 1st of January in order to optimize your tax savings already for that year. And you also have to decide who will be the beneficiary in case of death. Is it the kids, the partner, the family, or someone else? You can schedule a call with our experts to discuss this by scanning the QR code, and we can go through those questions together and help you to take decisions that make also sense in your personal situations. When you are doing your tax return or tax extra.eu, at the end of the process, the system will automatically do an analysis of your tax optimization potential. So basically, we are calculating what we call an OptiScore. The OptiScore is going from 0 to 100. If you are at 0, you have not deducted anything, so your potential for tax savings are huge. If you are at 100, you are normally at all the maximum deductible limits, so you know exactly if you still have potential to save on taxes or not. And then you can also book a call with our tax optimization experts. There we can go through all your different options you may have and tell you what options make sense in your personal situation. As you have seen, tax savings always depend on your level of income and your family situation. So best is to have a talk with one of our experts to give you a better understanding of what is possible in your personal situation. Don't hesitate to do so, and that's it for today. I hope this was kind of helpful, and see you in the next webinar. Thank you. Bye-bye.